Good morning, everyone. Welcome back to another episode of Capital Markets Quickie, where we bring you up to speed on the latest market moves every weekday morning. I'm your host, Endrit Cela. Yesterday was another record-breaking day for U.S. stocks. The Standard & Poor's 500 rose about 0.3%, securing its 31st record close of the year. The tech-heavy Nasdaq Composite hovered just above the flat line, notching its 7th straight record close, while the Dow Jones Industrial Average also edged higher, up roughly 0.2%. So, what drove the markets higher? Well, the big story was Nvidia surpassing Microsoft to become the most valuable public company. Nvidia's stock price rose more than 3.5% to over $135 per share, giving the chipmaker a market capitalization just over $3.34 trillion. Meanwhile, Microsoft's market cap slid to around $3.32 trillion. Now, let's not forget, markets are closed today in observance of Juneteenth, so we'll have a brief pause before we see how these new records hold up. Techs have continued to lead an AI-driven rally that, as experts noted, investors simply can't afford to miss out on. The enthusiasm is leading several Wall Street banks to chase their year-end Standard & Poor's index targets higher, with one strategist saying the AI revolution is still in its early innings. However, it wasn't all positive news yesterday. May's retail sales numbers disappointed. Government data released on Tuesday showed that retail sales increased just 0.1%, missing economist expectations. Meanwhile, April's numbers were revised to show a decline. This could be a sign of more consumer strain amid high interest rates and persistently stubborn inflation. On the Fed front, a roster of officials offered more commentary on the path of interest rates. Fed Governor Ariana Kugler said she remained optimistic that improving supply and cooling demand will support continued disinflation. She mentioned, "If the economy evolves as I am expecting, it will likely become appropriate to begin easing policy sometime later this year." So far, the message after last week's rate decision and forecast update has been clear: expect one rate cut in 2024. Investors seemingly haven't yet taken this to heart, with over 60% still expecting 2 cuts by the end of the year, according to the CME FedWatch tool. All right, folks, that's your quickie for today. Keep an eye on the markets as we move forward, and we'll be back tomorrow with more updates. Thanks for tuning in to Capital Markets Quickie. I'm Endrit Cela, and I'll see you next time.